Okay, so for those that are just watching this for the first time from the replay, I forgot to hit record. All you missed are the introduction screens. You did not miss anything important. Okay, go ahead, Jonathan. Thanks.
All right. So that's enough about me. Let's move on to get going. So here's the agenda. We're going to go some of the basics, deadlines and documents. I have a few things to say about that. We're going to look at the self-employed taxpayers. That's probably where the more challenging ones are, the work from home expenses, and then areas of potential tax savings, potential tax problems, and making your life easier. So first poll question, when are personal taxes owing for 2020 due? A, June 15, 2021, B, April 30, 2020, C, February 28, 2021, D, April 30, 2021, or E, July 1, 2021. So, oh, I can take this poll. I better get the answer right.
I would hope you get the answer right, considering you created the question. Okay, so we've got 3 people left to vote. So we'll give a few more seconds. Just a reminder, both poll questions must be answered in order to receive your CEC credits. That's the only way we can confirm that you were actually paying attention to be able to qualify for those credits. So we'll do a countdown, so 10 more seconds. So 9, 8, 7, 6, 5, 4, 3, 2, 1. Okay, polling is ended. And here are the results.
Yeah, the 2020 was kind of a trick. It was kind of a dirty trick because I had to have something in there, right? And April 30, 2020 was when the 2019 taxes owing were due. So,
and I just got to say, for bookkeepers who are supposed to pay attention to detail, you know what? That would have got me too. It comes first.
Okay. All right. So just to go over them, basic T1s, the filing deadlines are due April 30, 2021. That's seniors, students, employees, landlords, which often people confuse as being self-employed. It is not the same thing. And the self-employeds are due June 15, 2021. I would strongly recommend keeping an eye on the news. Would not surprise me at all if there are extensions either to filing deadlines, but I think more likely it will be payment deadlines that will be extended. There is a push from various lobbying parties within the accounting community to extend both filing and payment deadlines. I definitely see their argument for the payment deadlines, but not so sure I see their argument for the filing deadlines. So we'll see what happens. We'll keep that. We'll keep that an eye on that. But I imagine there might also actually be a bit of a push for the T4 deadline, though I don't know what's going to happen in the next 28 days really to make anything happen there. So I think most likely we are planning on the deadlines being a standard normal year, which would be the first, I think the 3rd time since KATA was founded. There have been so many weird extensions that have happened, the HARP lead hack, now COVID, things are kind of funny that way. But yeah, we're operating with the assumption that everything will be due as per normal. So taxes payable are all due April 30, 2021 at this time. Again, I wouldn't be surprised if the government extended that. But we're just gonna have to keep our eye on the news and see what happens with that regard. There might also be something like where it's due on April 30, but maybe they forgive penalty until the end of 2021 or some different scenarios like that. But again, we're operating under the assumption everything is due April 30 for personal taxes owing. So some basic Canadian documents. Okay. I'm going to kind of go through this list and I'm going to mention a couple of the key areas. So T4, box 42 is commission income. That can open up other areas of deductions for work from home and other employment expenses for people who are commission employees. The T4A, those are all those other kinds of payments, but we're going to see CERB on the T4A. We're probably going to see a lot of T4Es, which I did not include on this list. The T4Es from EI, And we're probably going to see a lot of those because, people had to take EI when things went on shutdown. T3s and T5s are very similar. They will not come from registered investments, so you should not receive a T3 or a T5 that is related to an RSP or to a TFSA. They could cover interest, dividends, capital gains. For the T3, there could be estates and family trust items as well. T5008s, these are almost, they were a lot better in 2019. I have to say, for the 2019 tax year, there's a lot of improvement, but we have seen these historically be incorrect from the financial institutions a lot of the time. So if you have a client who does a lot of stock trading, that's what's usually reported on these securities transactions. Make sure the adjusted cost base is correct. I remember we had a situation in 2018 tax year, so 2019, where somebody received, I think it was about 6 of these, and they all had the adjusted cost base listed as 0, resulting upon import from autofill my return in taxes payable of over $34,000. Now, when we went through the records and we figured it out, there was a good chunk of taxes payable, but it was about $2,700 in actuality. So that, financial institutions make these mistakes. It's a good idea to check.
If I can actually just jump in on there, what I actually found that I used to do, because for those who don't know, I'm out of taxes this year. This is like so awesome that we have gotten so out of it, so I don't have those pressures on there. But I would actually tell them to go to the bank and get their realized gain or loss statement. That actually gives the accurate information. I would not do it without that. Just strictly because I know that's got the accurate information. Some of the banks give a little bit of pushback, but yeah, that's what you want to look for, in my opinion.
There are other forms and records that'll work as well. Like most of the people who we work with who have stock trading, they keep actually track on their own because they don't really believe that the banks are going to do a great job of it. So
right, but that creates more work.
Yeah, well, not if they're doing it, but
true, very true.
We have those things that happen, and then like screenshots can often help at least show us what the adjusted cost base, what was paid, how much transaction fee was when it was acquired, things like that.
Right. And so how I did it is if clients had that or the statements, you're right, all the information is there. I would charge them more because we have to then pull that information together. The realized gain and loss statement, it was right there. So I would not charge any additional if I had it from there. But you're right, there's plenty of places to grab it.
That's a great tip. That's a fantastic tip.
Oh, I would, depending on it, I would spend hours. So I would tell them if they can't get the realized gain and loss report from the bank, they're looking at $75 an hour, minimum 3 hours work. So that was part of why. So anybody who really knows me and has heard me talk about things, somebody might say, well, Tanya, it's just one sheet. The purpose of every single thing that I do is to force them into doing what I want them to do. Essentially, I want the easy one. I want that realized gain and loss. I don't want to do the extra work. So if they really want me to do it, here's the repercussions to it. All there is to it.
That's fair. And one thing we've also noticed with the T5008s is sometimes people forget. So we had a tax return last year where we were prepared to charge our basic amount for a tax return. And when we pulled autofill, we found 30 T5008s on there that the taxpayer was unaware of.
Yeah.
And in fact, had not received because he'd failed to change his address with the financial institution.
A lot of them, TD does not even mail it. TD does not even send you an email. TD expects you to know when they're ready and to go online and pull them. So I'm not sure if some other banks may or may not work that way, but I know I had that exact same issue with TD, and their retort back to the client who still had the same email address and whatnot said, well, we have you set up that you have an email address. It's your responsibility to pull them.
Interesting. I hadn't heard that story before.
Yeah, it happened actually to 2 of them, and they were both TD. So now before we go on, if that's okay, there's a few questions in here that kind of jump back to that. So clarify the T4As. So KATA works with electricians who hire casual workers. Some are under 500 for the year and some are over 500. What is the requirement specifically for those under 500?
I believe, and I'd have to double check, but I'm pretty sure under $500 you do not need to issue a T4A, or
Yeah, so
500 you do. Now, keep in mind, if this is in the construction industry, it's a T5018 that needs
yes,
to be issued, not a T4A. So let's say, for instance, as an accounting company, we contract out somebody to do some website design as a subcontractor for, I don't know, X dollars an hour. We pay them $2,000 and we issue them a T4A. That's the way it should be. Of course, we shouldn't be issuing T4As for
okay.
overseas. So if we hired that person, say in the Philippines, then we wouldn't be issuing that T4A.
Now,
Did I just open up more questions?
well, you know what? I just want to bring this up because this is a conversation I've had with CRA, and I've actually had this conversation with a couple of boot campers in the recent months. So I think it's important to bring up. Technically, if you look at the definitions of what a T4A covers, technically we are supposed to issue a T4A for anybody who essentially we do any type of work for. So when I'm looking at that, and I've had this conversation with CRA, and I said, look, I am an external bookkeeper. I invoice my clients. I have an HST number, but according to that definition, each of my clients have to issue a T4A for me. They then have to issue a T4A for their computer person or anybody who is a self-employed, such as that. So they said, you're absolutely right. And this is probably this is well over a decade ago that I had this argument. And they said, you're absolutely right. And it was actually that year that they came in and they actually put through a little bit of a clarification that said they're working on clarifying that. They realize it's ridiculous. So therefore, they're not going to force you to issue T4As. There will be no fines as long as there's an invoice received. So essentially, that's how I deal with my clients. I tell my clients, as long as you're getting an invoice, the proper invoice with the HST number and whatnot, we don't have to issue a T4A. So I do have a physiotherapist who actually, she pulls the calculations from her system. They don't issue an invoice, so we T4A them. Anybody else, if there's an invoice issued, that is still CRA. I last checked in with them about 5 years ago on it, and they said that is at the very bottom of their to-do list of priorities. So it'll probably remain like this for at least the next decade or so longer, whereas they will not fine anybody for not issuing a T4A. So hopefully that provides some clarification. So that's been answered. So that's great. So answer live done. So quick few questions on here. There's something on CERB. Are we getting into CERB later?
So T4A is probably because the T4A will reflect CERB payments, or will be T4As issued for CERB?
Yes.
Is that the question?
Well, no, actually, so I'll read it. So it's from Dominique, and she's got, when submitting your first claim, you cannot have more than 1,000 in employment. So it's strictly related to the 14 days. So if somebody who normally has self-employment commission, contract, independent self-employed, just kind of reading through this.
We're not getting into CERB reporting and compliance whatsoever in today's webinar.
Yeah. So I will type the answer back to that, Dominique, then, because I'm sure I have the answer. So Huda says, for those over 500, she's heard, I've never received when I worked. So that I've kind of answered that. If you have more questions, Huda, type it in. I'll answer there.
Sorry, I'm not able to see the questions.
No, that's okay. I'm looking through. Okay, and it's just kind of using it a little bit as chat. And then is there a difference between a sub and a business expense? Technically, in CRA's definition, no. There is and there isn't, not according to the T4As. So the T4As is supposed to be issued to anything that would normally be considered a business expense. But again, they recognize that that's ridiculous. So do you have anything else to add to that one, Jonathan?
Not really, just to say that there are a ton of organizations out there that do not issue T4As properly or on a regular basis. I've seen them do things like include HST on the T4A. T4A, something that should never have been T4A in the first place, or just never issue T4As. I have seen T4As go out from construction companies in lieu of T5018s. So this is kind of a good step to the T5018. So for those who have construction clients, I think this is a good protection. It's interesting because there isn't a very well-defined, I guess we'll say, penalty for it, but there's a potential penalty with a question mark on it. And that penalty could be up to 200% of the taxes owing by the individual if they can get convicted of tax evasion. T5018s exist because the government is well aware of how much underground economy is in here, how much tax evasion goes on in this industry. And it's really, you gotta kind of appreciate that about the risk of taking on construction clients. So let's say I'm a construction business. I hire a contractor and I pay him $20,000 over the year. I fail to submit a T5018. He gets audited. He is reported $5,000 in income from us for that year. It turns out that it was actually $20,000. So he's under declared his revenue by $15,000. We could be subject to, my understanding is 200% penalty on the taxes owing by the individual. And it's not clear whether it's just on the payments from us. So if that's happened with other companies, it's a real question mark. It's a real risk. And I do appreciate that QBO now creates those. That's pretty awesome. So.
Yes, no, sorry, there was just one question here on that Dominique had actually just related to the T5008s. And I don't think this is one that I can answer. So I would be.
Let's hope I can.
So yeah, hopefully. So just says what, and if you want me to paste this in the chat, some people are saying the chat doesn't work. So I'll paste it here as well, just in case it might be a little easier to see it. So it says, what do you do when the investment firm's realized gain and loss report does not match the AFR slips at all? The AFR showed 400 transactions. The client had 2 capital gains accounts, one which combined the US and CAD holdings into one account and posted the realized gains as Canadian and listed the FX as FX gain or loss. The other special holdings, example, Ireland, etc.
I'm going to kind of step up and address
Please.
This from a high level.
Okay.
So essentially what I'm hearing is that there was a document provided by the financial institution, but the documents through autofill were much more numerous, which would require you to reconcile the two. My first move would be to contact the client and let them know, hey, this is what we found. This is what we have to do. This is how much it's going to cost you. And I would definitely not be doing that one for free because that sounds like it could be a couple hours work easily. We have seen that situation where there's a T5008 received by the taxpayer on paper that is kind of a summary of all the T5008s that CRA has on file. Now, when we've encountered those, we've been fortunate. I think the highest we had was in the high 50s, so it wasn't that bad. 400 to me sounds like there's definitely some room for improvement somewhere in that process, whether that's doable because it's through the financial institution or not.
Well, and that's it. Yeah. And what I found is from the financial institution that there are times where I've had that where it's downloaded and essentially what they're doing, and it's a financial institution issue, is every trade is being recorded as a separate T5008 versus here's the full account. And that's a financial institution thing. And essentially, if you get those, tell your clients to go back because I charge more for those. Again, it's a lot more that we have to reconcile to verify to make sure that nothing's missed out on. So I charge more for those and I send the clients back to their financial institution and have them complain to them over the crappy way they're doing it.
So one thing to keep in mind, T3, T5, T5008, all of these investment incomes open up line 221, which are carrying costs. And part of that is accounting and tax fees. So it does open up additional deduction areas. Maybe it's something like, they took a loan to invest and there's some interest rate off there. There's management custody fees, things like that. So it does open up some other deductions. But these, the T5008s can be interesting. Okay, I just looked at the clock.
Okay.
We need to keep going. Is there another question in there?
There's just one thing I'm going to answer live, and then I'll just kind of try to answer what questions I can. in the chat. So just, or not in the chat, in the question and answer. So keep an eye in there. This was with regards to the T5018. So she has a client who's a plumber. Does the same rule apply to the T5018? So the subcontractor invoices my client, does he then not have to issue the T5018s? As far as I'm concerned, and Jonathan, please confirm or tell me if I'm thinking this any different. T5018s in construction, 100% of the time, no ifs, ands, or buts about it, always have to be issued. Am I correct?
You should to protect your client. I know there's a lot of times where it doesn't happen. You pick up files, like we have a construction client who came to us, they had filed T5008s in 15 or T5018s in 2015. But then they switched accountants. They hadn't filed them until they came to us. And it's kind of a question like, oh crap, if we start issuing these moving forward and we don't have access to the old records, is this going to trigger a CRA coming back on them about it, things like that. So we're going to have to see how the cookie crumbles for that particular client. But yeah, if you have a construction related client, protect them. That's what it comes down to. Our job is to protect our clients. So that's my opinion. All right, so just quickly, T2202A, that's the tuition and enrollment certificate from accredited educational institutions. It's generally universities and colleges. Language schools, tutoring centers don't count. These can be transferred to parents or to spouses. So this might be something where you need to be doing the family together in order to maximize or minimize the family's total tax bill. And then the T2200 is Declaration of Employment Conditions. We're going to get into that a bit later. And then RSP slips are issued for contributions related to the tax year. We have seen financial institutions make a lot of errors in this area as well. When people go in, it's like, okay, I'd like to put $1,000 into 2020. This is like, say, February 21st. I'd like to put $1,000 into 2020, and I'd like to put $2,000 into 2021. And quite often the financial institution will bring it back and put it all in 2020, which could result in an RSP over contribution situation, which can have some pretty nasty consequences if you're not familiar with it. So that's another area to keep an eye on. And sometimes it's worth having a client go back to the bank and get an amended RSP slip. So some other tax slips, I'm just going to fly through these. So Quebec, we've seen some of the RLs. They're pretty straightforward. There's actually some guidance if the person is not a Quebec resident on the profile website anyway, about how to handle these within profile. And then of course the internationals, form 1042, 1042S, 1116. Those are the most common that we've seen. We did see some interesting ones, 8886, I think it was, just recently, which had to do with real estate transactions in the United States, things like that. Again, all of these they'll take a little bit of research if you're not dealing with them on a regular basis to figure out how to categorize, but none of them are, oh my gosh, I need a tax specialist at $600 an hour. You should be able to find out most of this information. Sorry to be kind of abrupt there and brief, but we have more material that I want to cover. Getting into the self-employed taxpayers, the T2125, which I'm sure people are familiar with, there could be multiples of them. What we like to do is we like to provide our clients a template or a list of what is pretty common on a T2125. It's important to know the difference between business and professional activities, because that can, depending on your software, if you check the wrong box, things won't get captured properly. The person could end up with too little or too much taxes payable, things like that. It is possible for SUs and TWS, which could affect their tax return in the current year. And we've talked about this, I think we talked about this in our last webinar, am I correct? That the CEBA forgivable portion is taxable in 2020. So just try and be careful about this. We like to separate into multiple streams of revenue if they have that, like if they're like a paralegal who's also with Amway and does some, I don't know, RMT work on the side. I'm just making that up. But like there could be multiple streams of revenue that could result in multiple T2125s. So just the basic list. This is right out of tax software. So anybody should be able to look this up and figure it out. Just a couple of highlight areas. Meals and entertainment, make sure things are documented. This is one of the most commonly reviewed areas, as is professional fees. This is a very commonly reviewed area as well. We often see people trying to put through things like their divorce lawyer as a professional fee. That is not a tax deduction, so you have to watch for those kind of things. Bad debts, make sure you follow the appropriate bad debt process, that you can show that you've tried to collect or the client has tried to collect and whatnot. Just writing stuff off, if this happens on a regular basis and any kind of volume, any kind of real money, this could result in a review and could result in trouble for your client. What are others? I'm going to go down through most of these. So travel expenses, again, make sure that it's very clearly business related. I've seen realtors do the year-end meeting in a beach in Mexico with their wife and 4 kids and try to write it all off. You know, it might be justifiable to write a portion, but it's definitely not going to be justifiable to write off your children's travel, that's for sure. Motor vehicle, I'll get into this in a minute about some of the things, and business use of home we're going to get into in more detail. I think it's probably good to quick pause. Are there questions at this time that need to
Okay, so yeah, there was a question here that I definitely can't answer in the chat here. Again, it's Dominique kind of going back to that with foreign holdings. So the issue, and I think this might be tied to that other issue, and she said it was due to the foreign exchange. The T5008s were actually issued in the different currency. So this question is, how do the foreign holdings greater than 100,000 work? So her client had a total, and again, this might be too in depth to get into here, but she says,
Dominique, if you wouldn't mind, I don't want to get into the weeds on those specific questions because we do have still a lot of material to cover. I know we're connected on LinkedIn and Facebook. Would you mind just messaging me and we can go over those together?
Perfect. Yeah, that's great. And then everything else here I can kind of answer here, and people can again just look through the answered questions.
All right.
Right. Okay, thanks.
So motor vehicle expenses, this is the area where we have found reviewed and denied expenses most common. Usually it's because the person says they have a mileage log and they don't really have a mileage log. They just made a bunch of stuff up. Things that will tip off the CRA are very round numbers, being like consistently 80% year after year after year after year or something along those lines. A proper mileage log would have to show these items: the opening odometer, closing odometer, date of travel, kilometers, departure, arrival address, and the reason for travel. I've also seen people frequently try to write off things like commuting. If you're commuting, it is not allowable deduction. They will almost always disallow vehicle expenses if there's not a valid mileage log. It's a CRA administrative requirement. It is not a law. So it can be challenged and defeated in court, but that's pretty expensive. And make it easy. Just make them keep a mileage log. MileIQ, Everlance both have solid reports, and Can't We Just usually results in taxpayer pain in the end. Let me give a quick story. So we had a client who was using the G Suite of tools. He had location tracking on his phone. He had everything in his calendar meticulously detailed in different colors. He had 3 things going on. He was an employee. He had a small like karaoke company that he'd go and host events at bars, and he was in a band. So there was 3 colors, and then he had a 4th for personal. Every single trip he made was recorded perfectly accurately by Google Tracking and Google Maps. CRA declined his expenses on initial review. It was extraordinarily detailed, but he did not have a complete mileage log. He could tell them the departure address. He could tell them all of this information except for the opening and closing odometer reading, and they just denied everything. Now, in his case, it wasn't as costly as it could be in others, but it's something to keep in mind. This is the most commonly reviewed and denied area that we have found. So vehicle leasing, interest expenses, I'm just going to skim over these. Most of the information can be got from The financing documents are from the leasing documents. Most software is very easy to follow and can be put in, and there is a potential deduction there. Home office expenses. This is one where we're going to see a lot this year. So in general, all the expenses will be prorated by the square footage of the office divided by the square footage of the home. I've probably had 500 conversations on, well, what if my office is a corner of the living room and sometimes the kids are playing video games there and whatnot? CRA's definition is it has to be a distinct office. I have heard stories of CRA showing up people's doors. I'm pretty sure that's not going to happen for the next couple of years because they're going to have bigger fish to fry. But keep in mind that there is risk here for home office deductions, especially if they're claiming their kitchen table as their home office or something along those lines. So some common expenses. One big thing to note is that mortgage interest can be deducted in some instances, but not in others. So employees never get to take off the mortgage interest. That's one area where people are often, think they can deduct it and include it, but it should not be included. We've even had people try to kind of sneak this by us by putting it in their T2125 information instead of in their work from home, the business use of home information. And it's pretty obvious, like, somebody's paying $15,000 in interest in a year, like, we're going to ask why, and you know what, so will CRA. So probably best not to try and pull that fast one because you'll probably get caught. Again, for the employee use of home, there are some items that are specific to commission employees only, and that commission should show up in box 42. If that T4 is not done correctly, CRA can just say nope, and they'll have to, the employee or the taxpayer will have to get an amended T4 and file a T1 adjustment. So, all right, next slide. So this is an area where we're going to see a lot. The COVID-19 work from home expense claims, it's roughly $2 a day. There's a push to have this increased. I think $2 a day is absolutely ridiculously low. We're issuing our employees T2200s. We normally do anyway. But if somebody only gets a T2200S, then they can use the smaller deduction, whereas the T2200, you can probably get a larger deduction by being more specific. You might have to do some comparisons to find out which is better to use, but I would be willing to guess it's most likely going to be the specific method in most instances if the person has a distinct office.
So,
all right. Yep.
Sorry, if we can just take, there's something here that I would love very short to get your opinion on, Jonathan, before I do this. So professional development can apply to most people. Is it different from professional fees? Yes, I've absolutely answered that part. However, my concern were, again, just a very brief expansion. Professional development, as that's education, I do know that there are some times where that can be considered a CCA expense by CRA. Do you have like a guideline that, hey, if it's a $5,000 course, it's that, if it's 10,000, because that's information and education that you are using on a permanent basis. So I've heard that from anybody. What's your thought on that?
It's interesting because it depends on what the benefit is and who the institution is, right? Like if you're paying like $5,000 for Joe Schmo coaching service down the road, I would claim it. I mean, I would claim it as a business expense, but there are people out there who just keep spending money on coaching and it keeps driving their income into negative. If you report negative income year over year over year, CRA is going to question the ability of that business to be a going concern and may come in and really start looking very closely at things. So I think it really depends on the volume and the amount of dollars we're talking about. So sorry.
Oh, I was just going to say, so it's not like cut and dry, like it is with, hey, I bought an office desk, or a computer under 500 over 500, for corps. It's not like that.
You're talking about
like to depreciate,
capitalizing that?
Yeah, the capitalizing the education. Sorry, yes.
I would not capitalize.
You wouldn't do that? Okay.
Ever, really.
And I've heard
it applies to one period, so maybe it can be a prepaid or an accrued expense or something like that, but like I would not be capitalizing.
You wouldn't. Okay. Because I've heard of one accountant or who wanted to. And so that was kind of why I thought, well, before I type on that, we'll kind of talk about that, because the way they said is you can use that going forward, but it wasn't a small course. I think it was like a $10,000 course or something. But okay, so you wouldn't. I'll go by that.
There's arguments to be made.
I
There's
say
an
you do my
argument to be
taxes,
made.
so I
There's an
just make
argument to
sure
be
I
made,
accrue
but
it. Yeah.
I would behave in the interest of the taxpayer in that instance, which is to
Okay.
pay less tax, which is to claim the whole amount. Because I have never read any area about education courses being capitalized. Like from
Okay.
that logic, that means all the money we paid through our T2202As through to universities and colleges should probably be capitalized for our lifetime,
Right.
which is
Okay.
kind of ridiculous. So,
Okay.
okay.
Makes perfect sense. Thank you.
All right. I'm going to get back to where we were. So some areas with potential tax savings. Generally speaking, spending decisions should not be based on tax. Why spend $1 to save 50 cents? Vehicle mileage logs, having those in good shape just helps protect the client. Again, the most commonly denied area we've seen. Buy versus lease analyses prior to the transaction occurring can result in some tax savings. Usually we're not talking about huge numbers, but it is something to consider. The cost of the vehicle, because only a certain amount can be written off through CCA and over time. So, buying that Bentley is maybe not the best tax move. The work from home methodologies and the comparisons between the simple $2 per day method versus the specific method. Again, we're going to lean towards the specific method, and we're going to look at that on every single one of our clients. And if any of them come under $400, then we're going to look at the other side. Pension splitting, that's an area that often gets missed on seniors' tax returns. This is not income splitting as it used to exist under the Harper government. That ended. I'll mention that again in a moment. Charitable donations. Political donations actually get you a lot more benefit than charitable donations, but those are some areas. And then I have medical expenses in brackets. This is an area where there can be risk. I've seen people try to write off everything they bought from Shoppers Drug Mart. There's not a lot of tax savings really there. I personally don't agree with the way that it's measured, but I understand why, and it's to prevent the kind of manipulation of tax systems and medical system to get high net worth individuals a ridiculous amount of medical expenses to reduce their taxes payable. Another quick story. So I have seen high net worth individuals get doctors who are, their friend to diagnose their children with some kind of, disability and put through the disability tax credit form in very questionable circumstances. And that can have huge effects on tax savings for high income earners. I don't necessarily agree with it, but it's something to keep an eye on. If the doctor does it, the doctor's on the hook, not you. So keep that in mind too. If you got to do what the doctor tells you to do in those situations. Any questions about any of this area? We got caught up a lot. I feel like I really zipped through the self-employed area.
Okay, so there is 2 questions here that I kind of don't have the full answers for. So Kim, so Kim is said that you've answered a question about the work from home. She's surprised by the $400 cap. Now I was typing answers, I wasn't 100% paying attention, but that $400 cap is only for those that are unsupported with receipts and with the short version of the T2200S or in the T777. Is that correct?
So it's pretty much. It's like the more specific you can get, the more likely you're going to get a better deduction. The $400 cap is ridiculous. I think it's way too low. I mean, just if you prorate the property tax on the office, it might be more than $400 depending on where they live. It's a ridiculous number. And really, I mean, okay, I'm going to be a little bit political here. I see this as transferring rental expense from corporations to individuals. So the corporations get to make more money off the back of the employees who don't get the tax break because they're only allowed to deduct $400 a year, which is pretty ridiculous. I mean, most of the work from home analyses we do usually end up in the high hundreds, low thousands range. So
Yeah,
I would encourage the specific method.
Okay, and then the last question having to do with this is, what is the limit on the cost of the vehicle? So regarding a luxury vehicle bought as company vehicles, 30. Okay.
30, yeah. I think, again,
I
that's
thought
ridiculous.
so, but yeah.
That's ridiculous.
These
it needs
days,
to be
you're
updated.
right. These days, it's
like,
ridiculous.
I mean, you can't buy a Honda Civic fully outfitted for $30,000, I don't think.
No.
And that's
no.
not a high-end vehicle.
Exactly.
So there needs to be some updates on the tax code. Okay, I'm going to be a little political again. We need some serious tax reform in this country, because right now the way it's set up is based upon a 1952 Income Tax Act that has had band-aids put on it year after year, government after government, and comprehensively has not been updated. Like, if it was 30,000 and it was tied to inflation from when the 30,000 was instituted, that would make sense to me, or something like that. But costs are going up and the tax breaks are not going up. So I'm pretty much guarantee that on the next budget we are going to see tax increase. I'm guessing it's going to be on the top income tax bracket, or maybe even the creation of a new tax bracket for very high net income earners. At the very top end. So, anything else you want me to address right now, or?
Nope. No, everything else I'm just kind of answering here, so that's great.
Okay, just quick things. Mileage logs that don't exist. These are potential tax problems. Medical expenses that aren't claimable. Quick comment about that. Some of you may have heard this story before. Someone very close to me was going to an accountant who did not charge a fee but took half your refund. Everybody here should know immediately why that's a problem, because not everybody's entitled to a refund. What was happening was he was literally fabricating dental receipts in the thousands of dollars for his clients to get them into a refund position so he could get paid. And the higher that was, the more he got paid, right? Eventually, one of his clients got reviewed. The reviewer saw the receipt, looked up the dental office, didn't find it on Google, looked up the dental office on the dental college, didn't find it there, started an investigation, turned out that it was, just absolute fraud. The accountant was charged, the accountant went to jail. Every single one of his clients were taken to the absolute cleaner. There was no mercy by CRA on them. We dealt with one of them and we went through taxpayer relief, and it was denied. It was denied, and they garnished his wages until it was paid. So it's an area to be careful of. Charitable donations without tax receipts. We see this happening a lot, where it's like, oh, well, I bought 50-50 tickets. If there's any measurable benefit to you, Princess Margaret Lotto is another one we've seen come through a lot. You don't get to claim that as a charitable donation. You need the tax receipt. Same with the political donations. If you donate to a lobby group or a union, if you're not getting a document, you don't get to take that deduction. So those are things to keep in mind. Income splitting stopped years ago. I get clients asking me about this every single year. Pension splitting exists. Income splitting does not exist anymore. Tax on split income from dividends, or TOSI. This is a little bit more complicated. This has to do with private corporations and income sprinkling. This is an area where if you think there could be a problem, you should probably seek professional advice or do some deep digging and some research. Literally, the tax specialists of choice that we work with, we attended their seminar and it was 3 hours about this. So there's a lot of different scenarios, and it's something to be cautious about. Really what happens is it's generally a non-eligible dividend paid by the corporation owned by one individual, or both individuals, but paid out, and one person really has no role in the business. It's just a way of diverting income to reduce the family's overall tax bill. Home office expenses, again, that distinct office, and legal expenses, they need to be actually qualifying legal expenses. Getting you out of your drunk driving is not a qualifying legal expense. So just some comments. You'll see a continuing theme here. Make your life easier. Communicate expectations early and often. Get your clients to have their documents completely compiled before accepting them and starting the return. We don't start the return in earnest until everything has been provided, because if we do, there's a lot of back and forth, and all profitability for that return goes down the drain. And we've actually, in the past, we have had returns end up with a negative margin because of the back and forth and the incompleteness of information. Tell your clients what they need review the prior year's file to see what slips they had and communicate that with them. Tell them what forms they should be expecting. Have a clear line in the sand that you won't cross. Have your ethics in order. There are things that we won't do. And if somebody wants to do that, we'll just say, listen, you're not the client for us, right? And tell your clients what to put together and provide you. I think the theme here is communicate, communicate, communicate. Make sure they know what they need, when it's going to come, what they have to provide you with. Help that guidance early, and preferably, hopefully, through an FAQ or through some kind of, Facebook Live or some kind of post on your website, something that will help them, that you can drive to them so you're not doing a million individual communications. Okay, last poll theme. What's the best way to help people prepare for personal taxes? Tell them what they need when it will come and when it'll come. Speak with them on the phone. Email them a list of what they need, A or B or C or nothing.
All right, so we're just letting people come in, and this was obviously perfect timing. There were a ton of questions. There's still 4 more questions in there. So this was a great topic idea today, Jonathan. As you were talking, what I thought might be a good topic for next time, and is potentially looking at peer reviews.
Oh, okay. Payroll peer
review. Yeah, payroll reviews and peer reviews. I mean, because that's been coming up lately, that it's as to just kind of like what that means, the best way to, respond, the best way to tell we found tax cycle is actually a beautiful, beautiful way. They do it really well. So just, I don't know if we can do a full topic on it, but just something to think about. So we've got one more person that has to vote. So we'll give 5 seconds. 4, 3, 2, 1. We're closing voting. So here are the results.
Yeah, I would go with A or B or C.
Yep.
Email is great. Speaking with them on the phone is great personal touch, but it does take a lot of time. Telling them what they need and when it'll come. Well, you're not seeing people in real life. Any which way of just communicate, communicate, communicate.
Yeah.
Build that expectation and move from there. So, one of my favorite quotes: failing to prepare is preparing to fail. We've been preparing for 2020 personal tax season since July 1st. So we're actually raring and chomping at the bit to get going. And right now, it's funny, some of our clients, their big confusion and frustration is they can't file their taxes already, right? Because CRA isn't open to accept the 2020 tax filings yet. But yeah, so any questions? Anything else I can address?
Yep, just a few things to go through here. So charitable donation receipts. So Dominique did actually used to work for CRA. So there's a few things kind of that I posted that she gave information. So she's just confirming that the receipts themselves are insufficient because there's a lot of fake and fraud ones out there. We also must check that the charity to ensure they're not on the CRA naughty list for being aggressive tax shelters, and they're because those are rampant in Calgary right now. There is a list where we can find that information. I'm happy to send a link where we can do that. You just simply type in the registered charity number, I believe it is. And so I'm happy to send that link out.
That would be great. Yeah.
Yeah, absolutely. I'll send that out with the recording.
Because I'll be honest, it's not something that we check. If we get the tax receipt, we're making the claim for them. And we just let that go. We don't do any deeper dig on who the charity is.
Right.
That being said, I've heard stories like private schools will have, here's your tuition and here's your charitable contribution, and the bulk of the charitable contribution is going back to the school to pay for tuition, maybe not for that student, but for other students. And they're kind of like, there's some very questionable things that go on there, but CRA has been allowing it for decades. So
yeah, no, absolutely. And like
kids are going there are very powerful.
Right. But like you, if I see that it's proper, I see the registration number, I don't take that extra step. If you want to be diligent, you can. I let the clients know we need to make sure. But the clients I deal with, it's the normal ones. It's the same ones you see all the time. There's also, just to point out with the HST, and I have had this happen where we've actually had a client denied some ITCs on the HST because when we went through the audit, some of the receipts that they ended up catching were a company that actually was not, they deregistered their HST for non-payment or something like that. So therefore those ITCs were not allowed. And there is also a link to check that up. Again, I do not check every one of those. I let the client know that onus is on them. If they want to do it, great. If they don't, I'm going by the information they give me.
It's in every engagement letter we have. We are
Yep.
not auditing or reviewing this information. We're taking what you give us at face value. We do dig a little deeper. A few years back, we got in trouble for digging too deep from CPA Ontario. Ridiculous, but it's something that as an accountant, as a CPA, I have to be cautious of.
Right. Okay. So Dominique would like to know if copies of the slides can be sent out.
Absolutely.
Perfect. And I've got those. So unless there's been a change, if there has been, just send me the new ones. Well, I guess I've got the link. That'll be on the link.
You've
so that's
got the
great.
link. It's a live document, but if you do file download it to PowerPoint and send that
Yes.
out, I think it would be better. I don't
Actually,
want
I can't send an attachment. I can only attach links. It's only an email body.
Okay.
Yeah, I can only attach links. So that's fine. So just anybody who's receiving it, don't ask for access to it because otherwise Jonathan will get inundated with a bunch of calls. Just simply save a copy to your own drive.
Yeah, I think that would be the best method. Now, if people do run into a problem, of course, I'm going to help out there. But
Yeah, absolutely. And that's great. There's been, okay, so let me go through this. So Dominique says, does my bootcamp include workflows and checklists for tax season? Absolutely does. We have one topic on that. Karen says, thank you for all of this information today. She's added to the list of suggested questions to ask the accountant because she's not the tax expert. Dominique is all for peer reviews and T4A for subcontractors, how to reconcile cash versus accrual for subcontractor. If we can, throw that in with the peer reviews, if there's room for that. Bev, okay, it looks like she couldn't answer her poll question, so she answered here. Thank you, Bev. Yep, lots of people are saying the peer review. So here's an interesting one then, Jonathan. Are you reviewing your rates for this tax year with regarding to all the changes? So are you upping your rates for that or are you keeping them the same?
No. Any new client, though, who was not a regular bookkeeping client prior to COVID, who has joined, does have to pay extra for any COVID-related program applications, things like that. For the actual base tax prices, we have not increased our prices. We are sticking in line with last year. And quite frankly, we're going to try and do that until we're out of this pandemic. But I guarantee you our prices are going to go up like the tax season we're out because we haven't raised our prices in now 3 years.
Right. Okay.
To give an idea, our basic return is $150 and up. So,
yeah. Okay. Perfect. And Primlada has actually I'm just going to share this out real quick. Oh yeah, she's been throwing posts and stuff here. So thank you very much. She's provided the links to the charity, so I don't have to look this up. So I'm just typing these real quick here. Thanks. So anybody can grab them. Again, I'll throw them in there. Amy says, of course, Amy, your neighbor, Amy. She says, thank you, Jonathan. This was wonderful. Steve Erickson says, this was excellent. Tanya, say thank you, Jonathan, for
I got to see live.
I know.
Okay,
I heard about
15
that.
feet away, but still.
I heard about that. It was
very nice to be able to have a steep tee on the driveway.
I heard about that, your driveway date. That's awesome. Okay, perfect. But yeah, lots of people saying thank you. Amy says that was the best day ever. Oh, and Premlada says it's actually Tim.
Oh, hey, Tim.
So obviously somebody else on your team.
Tim is new to our team. He's got amazing attention to detail. And yeah, I've been pretty blown away by him so far.
Awesome. Well, thank you, Tim. Thanks for that, for popping that in. Ali says thank you. Lots of thank yous. Okay. Well, that's great. Wonderful. This was like a jam-packed of information. So thank you, Jonathan. Thank you, everybody, for coming today. And it looks like we've got new names because now we've moved to the new time to allow the BC folks in, which is great. So that's awesome. All right, perfect. Well, thank you, everybody. Have a very great day. And again, watch for all of that stuff to come out. Email within two business days.
Take care.
Thanks. Take care, everybody. Have a great day. Okay, bye.